Bitcoin briefly crashed below 112,000 US dollars and unfortunately lost all support beneath us. We can see it here as well, all the liquidity was taken out. What this means, what my personal plan is at this point in time, especially for the current September, and accordingly for the coming months of October and November, we'll discuss all of that in today's video. I've prepared an incredible number of charts for you today. Things are especially exciting right now. It's definitely worth sticking around until the end. We'll also take a quick look at Ethereum, my personal plan, how I might prepare myself now in case there are further sell-offs. So we'll take a concrete look at my own plan. So make sure to stay tuned until the end for that as well. Otherwise, one thing should be said. I had actually already prepared a video for you. I recorded it on Sunday evening and wanted to upload it first thing Monday morning. But after this crash, I decided to make a brand new video for you with fresh information. In the video from last night, I already mentioned that I'm incredibly skeptical about how much liquidity is lying beneath us here. So I don't want to just repeat it all here, but at least now you know what's going on. And I thought at this point, I'll make a fresh video for you so you can start the week perfectly with up-to-date information. So please feel free to leave a like and subscribe. That would really help me out a lot. But now let's move on to the actual content, namely what has happened in the last few hours. We can see it here on a 24-hour basis. A total of 1.6 billion in long liquidations have been triggered, and that's actually historic. If we take a look at the whole thing, you can see here, I also posted it in my Telegram chat. In fact, it was actually the second largest liquidation event in the last 5 years. We can see it here by this spike, and it was also the largest liquidation event today. In other words, the largest long liquidation event since 2025. So that's really quite something what happened here, and we can already see it here on a 2-week basis as well. Pretty much everything below us was taken out. There's still a bit left up to 110,000 US dollars, but the majority was really successfully cleared out, and it's actually a very nice, healthy market cleansing that has just taken place. So personally, I definitely see this as a very positive event because, as I said, I was extremely skeptical. I also posted it here once on Sunday evening that I personally still expect that we will dip down again towards 111,000 US dollars. So you can check it all out here again completely transparently. I've linked everything in my Telegram group, completely free of charge, in the video description. Otherwise, as I said, let's first take a look at Bitcoin from a broader perspective. So before we get to my specific setups in a moment, we first need to look at the bigger picture to see if we're at risk here, and above all, what the important key levels are below us right now. Here we have the Bitcoin chart on a weekly basis. We still have the important bull market support band below us. We can see this here using my own indicator, the Vincent momentum bands, and we've now received support for the third time, once here at the end of June, then again on a weekly basis at the end of August, and now once more here on a weekly basis. So this support definitely needs to hold, just like the current pattern here. I think most of you should be familiar with this structure as well. I already pointed all of this out 2 or 3 weeks ago in a YouTube video. If we look at the current, there you can also see the contact point where I assumed the bottom was in, and that's exactly how it turned out. Now, of course, we can continue to look at the current structure here. It's a relatively similar behavior to what we already saw in 2024. Back then, there was also this one liquidity flush to the downside, specifically here on August 4th. After that, the structure continued to develop, and then afterwards there was another spike down to the gray box, basically back to the origin. We're seeing exactly the same thing right now, that there was another spike here, depending on how you draw the gray box. There might still be a bit of room to the downside. That's why I've placed 1 or 2 limit orders below us, in case there's another small dip to 111,000 US dollars, or in the worst case, 110,000 US dollars. We can see it here on the current liquidity heat map. That's something I would always recommend to you. Prepare yourselves for these market maker moves. In rare cases, of course, you might have the chance to sit right in front of the chart and place an order exactly at the right moment, but in my experience, it's definitely better to be prepared, because the market makers move incredibly fast when they make a quick dip. It definitely makes sense to position yourself in advance, either with a limit order, as I communicated in my Telegram group so that you're informed, or, of course, if you're feeling completely lazy and don't really want to trade yourself, it absolutely makes sense to run trading bots that automatically buy at good prices and thus take advantage of these market maker moves. We can also see it here, for example, with all the bots that are generating quite a bit of grid profit. Basically, it's just the profit that comes from buying cheap and selling high. And it's still my strategy to have several trading bots running here, because these market maker moves are, of course, an absolute goldmine for trading bots, which can then nicely place further orders. It definitely makes sense. Or, of course, you can specifically take advantage of the liquidity and position yourself in advance, and that's also my plan going forward. So, having already covered this point regarding the bigger picture, personally, I remain bullish. The structure, the current pattern is still intact. Just as a quick note, we can see it here in the traditional markets as well. Here too, one all-time high after another is being reached. We are seeing extremely strong relative strength here, including in the S&P 500. And as we all know, the correlation between the traditional market and the crypto market still exists. And if we see here that the traditional market is doing very well, hitting one all-time high after another, then the probability is extremely high that Bitcoin will continue to rise and that Bitcoin won't suddenly do this and enter a bear market. So please, under no circumstances, let yourself be shaken out of the market right now, especially after such strong liquidations where everyone is briefly shaken out again. You really have to be extremely careful not to get swept away here, because the overall plan obviously still remains in place, which I've actually been communicating in my YouTube videos for several months now. So feel free to watch the old videos as well. I've said it again and again, I am still convinced that Q4 will be very bullish, very positive. We can see it here as well, so once again, as an important reference point from the past, let me just move the face cam up for a moment, and you can see here that we have important historical data. Every time so far that September closed green for Bitcoin, both October and November also continued to be green. We saw it in 2015 plus 2%, in 2016 plus 6%, and accordingly October and November were extremely positive. In some cases, the rally even continued into December with another 30% gain in 2016 and 13% in 2015. We have to keep in mind that both the average value and the median value in September are always the worst. So historically speaking, September is in fact the worst month. In this case, looking at the average value after June with minus 1.4%, September is always extremely negative with minus 3%. However, if September happens to be positive, it has always been the case historically that October and November have ended up being extremely strong. We also saw this in 2023 and 2024, similar behavior. There too, I would say, there wasn't a typically negative September, and accordingly, October was very strong, and in some cases, this strength even extended from September all the way into December. Of course, we always have to keep a close eye on everything, but overall, things still look perfectly fine. Just as a quick note, this chart is a little bonus chart. I've never shown it in any of my YouTube videos before, and it's about the Russell 2000. And for those of you who don't know what this chart represents, it shows the low caps in the stock market. So basically, the 2,000 smallest publicly traded US companies are shown here as a chart, and we actually see an incredibly similar chart pattern here, just like in the altcoin market. We saw this peak once, and that was at the end of 2021. That was exactly the top area of the altcoin season. As mentioned, shown here in blue, total 3. In this case, all altcoins are accumulated as a chart. So here, all altcoins excluding Bitcoin and Ethereum are shown at this point. The correlation here is almost 1-to-1. It's really crazy and unsettling how the exact individual tops and bottoms happened here. And that's why, as important information here, as long as we see that even the low caps in the stock market, so basically as long as the traditional market is still initiating its cycle, if we see here at this point that the S&P 500 is hitting one all-time high after another, the cycle is also unfolding here because just like in the crypto market, there is a clear cycle in the traditional market as well. In other words, a cyclical behavior among the individual companies. And if we can see here that the low caps in the stock market have also reached a new all-time high at this point, then the probability is relatively high that accordingly the altcoin market will also start to pick up again. Of course, it's a process that takes time. It doesn't all happen overnight, but even so, it's always extremely important to me in the YouTube videos to give you the bigger picture so that you don't get caught up in the day-to-day, so you don't become completely panicked or anything like that if something like this happens. That's why you definitely need to stick to your own plan as well. At the end of the day, everyone always has a slightly different approach, but the most important thing is always to work your way down from the top to first look at the big picture, and then you can get into the details. You can also take individual trades here, of course. There's absolutely nothing wrong with that, but it's still important to stick to the overarching plan and not suddenly start building up large short positions into no man's land or anything like that. Of course, it's perfectly fine to build up individual short positions as a hedge. I've also demonstrated that here once. Especially right here in the area around 118,000 US dollars, there's strong resistance coming in. Shorting in the short term is okay, but in the long term, scaling up positions doesn't make sense at the moment. There's no reason to be bearish or anything like that. So that's pretty much it for the overall update for now. So now you're definitely up to speed. Now, just very briefly on a daily basis, it's definitely important that Bitcoin holds this current level, specifically at 112,000 US dollars. We can see it right here. Bitcoin has already touched this level quite a few times, so it's kind of a make or break point. It wouldn't be the end of the world if Bitcoin dropped down another level, maybe to this 0.236 level, which in this case is at 111,000 US dollars. That could definitely happen, but still, the bottom should slowly but surely be in for Bitcoin now. And especially after such a strong liquidation, which is basically a kind of market cleansing, the probability is relatively high that the bottom is slowly but surely being formed here for Bitcoin. At the end of the day, nobody really knows. Now, I want to talk about another chart. Here, you can also draw the individual Fibonacci levels the other way around. This time, I drew it from swing high to swing low. You can also draw it from swing low to swing high just as well. What we can see here is that the Fibonacci golden pocket level, the 0.618 and 0.65, is exactly at 111,000 US dollars. We need to keep that very clearly in mind. If we take a look at my indicator here and change the period length to 200 so that the current structure is included, we can clearly see that there is a significant increase in volume here. This means that this area is extremely fiercely contested, both by the bulls and the bears. At the moment, it still serves as strong support beneath us. Personally, I believe that if Bitcoin should dip into this area at 111,000 US dollars, there should definitely be a rebound, at least back up to 112,000 US dollars, if not even back into this area here, just so you're aware. But it is also quite possible that the current area will already hold. We can see it here exactly at the 0.5 Fibonacci level, where we're now getting strong support again. So it's quite possible that we'll see a relatively quick V-shaped recovery upwards. Right now we can see this volume gap here. Very little liquidity is needed here to push the price up because there is correspondingly little trading volume on the vertical axis. Just so you're aware, things could move up again relatively quickly here. So just stay patient. As I said, September is historically a relatively boring and negative month. We just have to see how September ends, but don't let yourself get shaken out of the market under any circumstances. Personally, I will be building further long positions exactly in this area. That would also be a relatively good opportunity to actually set up new trading bots. So especially if you want to be positioned long, it definitely makes sense now after such liquidations to set up certain bots again. Of course, these trading bots love volatility. I've also been able to pull out quite a bit of grid profit here with one or another bot. But still, if you take the same approach as I do, positioning yourself long accordingly, then it definitely makes sense, logically, to build new positions after such a small dip. Just like with my own trades here, I have once again opened a large position at 111,000 US dollars, basically to cover exactly this area in case something like this happens again at this point. Otherwise, I've also prepared myself here for a worst case scenario, because at the end of the day, no one knows what will happen. Of course, I absolutely don't want to jinx it or anything like that, but I still want to be protected and I want to scale up the individual long positions the lower Bitcoin falls. And with this strategy, I've done extremely well, especially if you look at the current structure. The deeper Bitcoin drops, the more you scale up your own long positions, so that you're perfectly prepared for the next upswing. This is by far the most sensible approach. Now, to wrap things up, let's take a look at Ethereum and see what the current plan is there. We still have the current yellow box here, which is essentially where a consolidation phase is taking place. We need to be very clear about this. Things could slowly but surely get critical if Ethereum doesn't hold this level at 4,000 US dollars. Let's say 4,080 US dollars, then it definitely becomes very critical. At that point, we have a clear volume gap here. Then it drops down a level relatively quickly and specifically right back into this area. We can actually mark this area here, as this is practically the next support below us at 3,600 US dollars. Personally, to be honest, I don't expect that to happen, so I can well imagine that Ethereum will recover here, right in this area, but still, we need to be prepared. So now we definitely need to keep a very close eye on Ethereum. This current support below us is extremely important. We can also see here that we've already had several contact points, specifically in this area, and also back then, exactly in this area. So it's now extremely important that Ethereum doesn't break below these levels, because otherwise, things are definitely looking a bit bleak. But there is definitely also some good news for Ethereum. During this period of consolidation, all the indicators have time to cool off nicely. We saw it here once. We were heavily overbought, then heavily overbought again, and that's definitely not a healthy foundation to build on. That's why it's definitely good to see that some market participants have been flushed out again. Accordingly, all the indicators are cooling off nicely. Even on a daily basis, we've now reached a value of 40 on the RSI, and that's definitely good to see, because that's exactly when the next upward movement can take place. Similar to back then, a long consolidation phase. During that time, the indicator also had time to cool off here. We briefly dipped in here again as well, liquidity flush, and then the next upward movement took place here too. And that's how it's been every time with Ethereum so far, and I can absolutely imagine the exact same thing happening here again. The indicator cools off before the next upward movement takes place. That's why, if you slowly but surely start building more long positions in the lower range here, or, like me, have some bots running here in the Ethereum space. As you can see here, the bots are running pretty well, so the performance is really solid. There's some nice passive work being done in the background, so you really can't go wrong with that. I've linked everything in the video description. You'll also get all the bonuses there. So if you sign up as a new user, I think you get another $500 completely free as a gift, and you'll also get access to my free Telegram group. Everything is explained again in the video description, including how you can join in. Otherwise, that's it for today's video. I don't want to drag it out any longer at this point. I think I've said everything I wanted to say. Otherwise, thank you very much for your attention. I wish you maximum profits for this week, and I think with this update, you're definitely well prepared. So, I'd say we'll see each other again in the next video.